Welcome back to Professional Trainers Academy, a school that trains private candidates, students which are organizing how they can sit for national exams for different options. So we are welcoming you about the session of today. Remember, we are going to deal with financial accounting. Do remember last time we have introduced to you about the accounting issues, and in today's session, you can guess what is it? This is journal entries. So remember the subject is financial accounting. And we are dealing with Unit 2, which is talking about the journal entry. Yes, today's unit is dealing with journal entry. Briefly, a document that deals with today's or daily transaction record is what we call journal. When you see the word journal is coming from the French word which says jour, to mean a day, to mean a document that highlights or that records all daily activity at a given period of time. So let's start by talking on its definition. That will be 2.1 to deal with this document. So this is definition of journal. So when you say journal, you can say this is a document that records daily activities of the business at a given period of time. I can say it's just a document that records, that highlights, that in which we put the daily activities of the business, means activities that a business is taking. So here I'm dealing with it in generally to say that it records whatever happens and affects money in a business has to be recorded, we have said. So therefore, we have to put each and everything. So that is what we call journal. And today's journal is not other special journal. We are going to look about the general journal indeed. Therefore, this is a document that records daily transaction of the business at a given period of time. Remember, we have said that at a given period of time, because you can have January, February, it depends on the period, journal. So the second point is to have, someone can say what is the format of journal? Format of journal entry. So here we say, remember on our title, this X symbol are mentioning the names of the business. Which business is that? I'm going to say X is journal entry. As at, then you mention the period. So on our title, we do have like 3 elements in which every document in a business several times could have, especially those we are dealing with in accounting. So we have one is the name of the business, right? The name of the document on which you are issuing, and even the period you want to present. Maybe it's January, February. But about the period, attention. We would like to put the last date of the month to mean that who will read this document will know that they are closing this document at a such period of time. Therefore, there are three elements in the title: the name of the business, the name of the document, as we shall see, then the period on which you are preparing. So it has some different columns and rows. The first column records the date on which a transaction is being affected. For instance, on first, on second, whatever. The second highlights the column that reserves for details. You may even say particulars. This is a column that highlights the affected account. Remember, or we shall see, we need to look which account are we supposed to open. For instance, I'm buying a marker. I have to recognize a marker bought and an amount of money spent, whether by cash, by check, on credit, or any other form of payment. Therefore, on the issue of highlighting the details, I've mentioned which account affected. And there is a time I may need a column. I need a column of folio on which I'm presenting the number of transactions, and I may even put some details. For instance, I have bought some goods. I need to highlight some other clarification in the form of like number of the invoice, reference number, any other. Another column is reserved for the debit side. Remember on the last unity we have seen last session, Unit 1, in introduction, we mentioned some abbreviation in accounting we are using. Basically, there is DR to represent debit side. The other one is the next column, credit side, to mention the credit side. Therefore, there are two sides that records the amount. These columns are representing for amount. I may put like the issue of currency. For instance, we are using US dollar here, US dollar here, or any other currency. Like I may mention Rwandan francs, It depends on which currency I want to put, but not on always necessary to put. And in fact, here to put most necessary is to put a such amount is how much an amount of money is representing a transaction happened or took place. So these are the 5 major columns of a journal. But after recording different transactions, as we will see, you may even put another row that highlight the issue of closing your document. Remember, down to put ending date, the word total here, leave a dash, because the foreign number, for totalizing the number of transactions or such reference is meaningless, right? No need of totalizing. Then you put the amount totalized here in a debit and the amount in a credit. And this amount should be equal. As we're going to see it soon, there is a canon that you are using in accounting called double entry concept, which says that if there is an account which is debited, there should be another account which is credited on the same amount and vice versa. To mean that I have bought a such item, a recognition of that item, its value should be equal to an amount of money on which I'm spending about that item. Therefore, debited amount should be equal to the credited amount. That's why the total amount found here is equal. This is the format Generally, we can say it has most of the time 5 columns in which you are mentioning the date on which a transaction is taking place, affected account in which you are mentioning like 2 or different account, it depends, we shall see, and the number, reference number, or some invoice number if there were some goods bought, sold, any, and the affected amount debited and credited through the concept called double entry concept, which means if there is an account which is debited, there should be another account which is credited on the same amount, and vice versa. We are saying vice versa because you can even start by saying credited and then you end by saying debited. This is from the man made a rule in some centuries ago in 1842, a man called Lucas Pacioli, in his book where he has said that if there is an account affected, there should be another account affected in the credit side. In the book called Summa Arithmetica, Geometrica and Proportionalita, a Greek man, Lucas Pacioli. Then let me welcome you to the next point after the format. We are going to look another point, 2.3. Here, let's deal with principle of double entry, which will guide us to prepare the journal. Principle of double entry. You can even call it double entry concept. You can say double entry concept. This principle says that if there is an account, let's highlight it. This principle says that if there is an account which is debited, there should be another account which is credited on the same amount and vice versa. To mean what? The concept. We are saying double. In advance, they used to record in a single entry. For instance, I'm buying a car. They used to recognize a car bought without recognition of an amount of money spent. But through the idea of a man called Lucas, the author, a man called Lucas Pacioli, a Greek man in some centuries like 1842, in his book called Summa Arithmetica, Geometrica and Proportionalita, he mentioned all this, including the principle of double entry, where he said that if there is a such transaction affected, there could be a record in form of double, like I have to recognize account debited and I have to recognize account credited. So we cannot keep having a single entry account as the word is getting updated. So from the same year till now, we are still using the same logic of Lucas Pacioli. And we are going next to see all these examples of this debited account, this credited account. It's where we are going to look principles of generalizing. 2.4, on which we are going to see some examples of assets, liabilities, income or revenues and expenses. On this point, even though we have never seen deeply their meaning, but let me first talk on them. When you have an asset, these are the properties of the business at a given period of time. We shall see soon in its unit deeply about the balance sheet. And the liabilities are debts or obligation that a business has to cover at a given period of time. But when you look about the income or revenues, these are the receptions or the goods, the things you are receiving in the form of what you have done, right? But when you look about the expenses, these are like disbursements or expenditures that a business is incurring. You know, when you are saying to incur, you mean you are spending about something. Then we are going to see one by one deeply so that you will know in which category an element belongs to. Because, for instance, I'm buying a land. You can't record the land without knowing in which category it belongs. Land is a property. I'm buying a motor vehicle, a building. These are assets. These are the things which belong to the asset. You need to look their category in which they belong to. Therefore, let's go see one by one. Let's start by something like assets. We mention assets. We have said these are properties, right? And we will be categorizing liabilities. B. Liabilities. And we will also deal with C. Income. Income. Or another one, something is an expense. What you are paying. Expenses. Let's start from assets. We are looking at examples. For instance, I have a plot. When you say plots, someone can also say land is an asset. Office furniture, office equipment, you have motor vehicle, these are the properties. Here we are mixing both, whether they can last long or they have a short within the period of time in the business. So we are recognizing whether something is an asset, that is it. But when you go deeply about the balance sheet, we'll go whether they can last long or for short. Here we are classifying them as just an asset. Apart from that, we are looking the motor vehicle. Someone can say computer, computers, photocopier. You know, this machine using for making photocopy. Photocopier. We have, apart from that, you might, when you say goodwill or good reputation, if someone made a name, this is a property to him, right? That he deserves money. You're gonna see it deeply later. But someone has money in hand, cash in hand. It's an asset. The amount of money you have at the bank, cash at the bank, it's an asset. Some bills or notes or accounts, receivables. What are these? These are an amount of money that someone owes to you, but he or she has never paid it. Means you have sold goods on credit to them, but they are not paying. That's why they are going to be paid later. So if they are going to be paid later to you, these are assets to you. Someone owes money to you. This one is the receivables. You may expect to get an income, but you have never received it on due time that you were supposed to receive. That is what you call accrued income or outstanding income. For instance, here in the professional trainers, we have some shareholders which are dealing with education, but they have also other businesses aside in the form of, let me say, brokerage activity. You may find someone like is having an agent in a brokerage activity, but you are linking them with that agent. Someone wants to buy a car. Maybe he's in Musanze city. Another is at Rubavu. But the customer, if he or she is at Rubavu, want to visit the car at Musanze, you are calling the customer, the agent of you from the same area to link, because maybe you cannot reach there on due time. But if you are agreeing that the commission received from there in the form of income will be paid to you if you are available. But as if you are not, you delegate your agent. If the agent went there and get money on the behalf of you, that agent could use it in the two ways. Agreed upon, like when you have said in advance, this amount of money of 100, let me say, received, will be shared equally if the deal is done. Assume that the agent went there, then the deal is done. You were supposed to get this income in the form of commission received. But if the agent got money, and by default, after receiving money, he or she receives a call and saying, do you know what took place? At the same hood, your kid had an accident. Please find him at the hospital, Musanze, Ruhengeri. Then you find you are in trouble, in the situation you were not expecting, right? Then you call the man who sent you as an agent. You said, you boss, my son got an accident. Finally, the deal is done. I have received your income. But I am supposed to go to the hospital to take care about him. Please, I was supposed to give you 100,000, but get 50,000. Other half I will give you back. Let me first take care about the kid. That man, that woman, or any other person who were supposed to receive an amount of money in the form of income, he was expecting to get money, but he has never received the money on due time. That time, that income is still an asset of him from the same agent. He or she will recognize what we call accrued income or outstanding income. Accrued income or outstanding income. So an amount of money you're supposed to receive, but you don't receive on due time. So something like we have debtors. When you are selling goods on credit, we find debtors. That is coming from the word debt. Some people used to pronounce wrongly saying debitors. No, we could not say so. We could say debtors, right? So you have even some stock, goods which are stored, they are all our properties. Whatever you owe on your own is your property, and so on. So these are the classification of assets. In a business, we may have many more about the business's properties. So let's go to the side of capital. Liabilities. So for instance, we have in liability, the first thing is a capital. Some people might mind, how comes a capital is a liability to you, yet it is your own money? You may find this answer to the same question. Let me highlight it. Let me give you a scenario. You will get how comes to be a liability to the business. Someone is saying, how comes I start with my money, then my money comes a debt? How? My friend, don't get confused. In accounting, we shall have a session of them. There are some different concepts of accounting, where there is a concept that says that the properties of the business are different from those of its owners. Business entity concept. Means when you bring cash or investment in the form of capital to the business, you are lending amount of money to the business. Therefore, that is the first reason. Another one, in the law of business, they say that there are two people. When you say two people, I'm not meaning a boy and a girl. I'm not meaning about the issue of woman and a man. I'm not meaning for the issue of related to any sex. I'm just dealing about physical person, human being touchable like me, like you, like somebody else, and the moral person like business. So in the law of commercial, they say that if that physical person brings money to the business, he's lending the business. So two reasons involved. That's why a capital is a liability to the business. So another one, without highlighting whether it's long or short, we are mixing here as we are listing the examples. We do have some loans. We have some reserves. You get money from the financial institution in the form of credits. They are lending you, right? They are lending you. This is a kind of debt. Some people might even think about how comes an amount of money set aside, not used is yours, you use as your reserves, then how comes to be your debt? Let me clarify it. The amount of money in the form of reserves are debts because of the following reason. When the AGM, annual general meeting, when you say AGM, annual general meeting, annual general meeting, when several times the annual general meeting used to take place at the end of the year accordingly, when they are looking the profit and the issue of pro rata basis, sharing profit and loss according to their shared capital in the business, and referring to the partnership deed or partnership agreement made while the business was being started, right? These people in the form of shareholders were supposed to get what? Were supposed to get their dividend in the form of the return on the capital shared. Then there is a time the business, the annual general meeting, including this board of directors, can decide to never use this amount of money from the profit, right, in sharing dividends or doing any other things. Then they do what? They say, let's put it aside. We will look how we can use for further period, in the next period. Then, if this amount was supposed to be given to the shareholder, and this amount is put aside, that becomes a credit, that comes a loan to the business. Why? Amount of money was supposed to be given to the shareholder, but they are not mentioning what it was supposed to be used. Therefore, they are putting aside. Therefore, it is like these shareholders are giving it back to the business in the form of credit. Someone might say, how comes to be a loan? When you go in the balance sheet, we shall see. How comes to be for wrong? It comes to be for wrong because this reserves will be used for further period. And remember, AGM is taking once a year. Means if things are beyond 1 year, they are becoming for wrong. That's good. So let's go to the other element here, including like creditors, people who owes money, to whom business owes money, people to whom business owes money, right? So people like suppliers, right? The bank overdraft, Some people in business, especially workers, they may need to get some credit on what? On their salary. So if they want to ask the credit on their salary, they ask advance on their salary. So the business is not the one which is getting the salary, but it is paying the salary. There's a time business might face a situation on which they are not able to do what? To pay the salary of workers. Then it deals with some financial institutions, including banks and other things like SACCOs. Then they go and deal with bank. Please, bank, can you please pay for us, these workers, so that a such period of time, next 2 weeks, 3 weeks, 1 month ahead, we can pay back directly. So that time, the business is having a credit in the form of bank overdraft. But anyway, some even workers, they are getting what? They are getting the bank overdraft in their what? In their current account where they deposit their salary. And that's where in French they call it découvert bancaire. When you go in French, they call it découvert bancaire. And most of the time it is taken on a monthly basis. It can't go beyond for long. It is short because will you keep having that? No, no. So things like those, something like dividends. Remember, these are what? Dividends. These are the returns of the shareholders. If the business owes to pay this money to them, the business has a debt to them, right? So dividend also, these are the debts of the business in the form of liability. Something like accrued or outstanding expenses. An amount of money you are supposed to pay, but you don't repay on what? On due time. Remember, on the other side, you have said accrued income. Accrued income we're supposed to receive, but you don't receive on due time. Accrued expense you're supposed to pay, but you don't pay on due time. For instance, here I may have accrued salary. You are supposed to pay workers' salary, but you don't what? You don't pay on due time. Accrued rent paid. You are supposed to pay the landlord, but you don't pay landlord on due time. I know some people, including different colleagues, they are saying, today I was supposed to pay landlord, blah. I don't know what such expression they can say. But remember, when you don't pay him or her on due time, that is what we call outstanding rent paid or accrued rent paid. We may have several debts in the form of liability. At least here you are getting something about the debt you are supposed to cover. A business might cover several things in the form of the debt. So we are covering these sides of assets and the liability. We go to the side of income and expense. Here we have some, for instance, like sales revenue. When you get money from sales turnover, the total sales from you, they are a form of income. And the oppositely, you are making what? You are making purchase. When you are purchasing, when you are acquiring, when you are buying something, you are doing what you are spending. Something in the form of return from your rent. Rent received. Someone is getting money from rent. That is your income. But if someone is paying rent, is an expense. Oppositely. Someone is getting interest about something, interest received, but interest paid will be expenses. In the form of commission, I'm receiving commission from somewhere, but here I'm paying commission. Commission what? Paid. I'm getting profit for a such period. Periodic profit, these are income. But when you get a loss from the business, you are getting an expense. So on this, maybe a business can be taken to the court, right? A business can take someone to the court. So if a business is taken to the court, then it pays the fines. That is what we call fines paid. But there is a time it won the game, the case, then there is what we call fines received. Fines received. Together. So other things in form of payment, you are paying for communication, right? Someone is paying transport. Someone is paying wages. When you are paying wages for workers or salaries in the form of the return on a monthly basis. Someone is paying publicity. You are paying electricity. And so on. Whatever you can pay is an expense to you, and whatever you are earning, you are receiving is an income to you, is your revenue. You are saying income, or you are saying revenues. So what you receive from what you have done, this is an income.